Good morning and welcome along to the June month report of May for Portal Asset Management. And of course, we're reporting today on its two funds, the Portal Digital Fund and the Radiance Multi-Strategy Fund. We're also introducing our new CIO, Greg Galton, who of course is with me today. Good morning to you, Greg.
Good morning, Deryck.
Look, let's start because we've got investors that are interested in their investment, of course, and the path forward and what we're doing in regards to the Portal Digital Fund and in regards to Radiance. Let's start by hearing about your background. I think it's important for people to understand what your expertise is and how long you've been in the finance and investment industry.
Okay, yeah, thanks. Always happy to share that. So I've spent over 25 years in traditional finance in the equities market space, both as a research analyst, head of research, and also portfolio manager. As part of that, I've personally been in the digital asset space, in the cryptocurrency space for the last 5.5, 6 years. It's an area that I'm very, very passionate about. I could really see the future of finance being in DeFi and in crypto assets. As it's space I've been doing liquidity farming, into liquidity pools. I have a couple of Bitcoin mining machines that I run. I even run my own Bitcoin node. And I'm not just invested in Bitcoin, but I'm invested in a lot of other tokens as well. But the longer that I've spent in the space, the more I've realized how important Bitcoin is as a separate asset from a lot of the other Web3 digital assets. To me, Bitcoin is a very unique store of value. I joined Portal just over 18 months ago. I was really brought in to bring that institutional research rigor to the whole process in terms of valuing and understanding protocols. And really, it's been an incredibly enjoyable journey. I'm now taking the progression on to the next role in terms of being CIO. I've been running the Bitcoin extraction strategy myself since the 1st of August last year, so very familiar with that, and now taking over the Portal Digital Fund.
So, Greg, the Portal Digital Fund of funds, and also Radiance, which is, of course, a direct investment. It's the strategy that we advise upon. In fact, we trade the strategy. So very much sleeves up kind of role now, and you trade it, the Radiance strategy, every day, 7 days a week, and monitor that. Quite a different entry into the space. We've talked about the Portal Digital Fund, and we've talked about pivoting that fund. Can you talk to me a little bit about what the first steps of that have been and what are your plans moving forward?
Yes, okay. So I guess with the Portal Digital Fund, we've probably been a little bit, it's fair to say we've been a little bit disappointed with the performance over the past few years. The fund does have some traditional kind of hedge funds in there that are very reliant on market beta to perform well. And you've seen an environment in the last 4 years where Bitcoin has continued to dominate the ecosystem and actually grow its dominance of the ecosystem, which basically just means that it's outperformed all the other tokens over that 4-year period of time. So what we're looking to do is really looking to bring some of that professional outperformance that's non-direction based. It's not reliant on market beta. It's very, very clever strategies that may or may not be, quant driven or driven by machine learning, looking for those different opportunities which we think they're rapidly emerging in the space. We're seeing them coming into funds now, into hedge funds that Portal Digital Fund is now available to invest in. And we're really looking for that systematic alpha that really is not based on the market beta. So one of those strategies that we've already invested in is the Radiance Multi-Strategy Fund, which, as you know, has its Bitcoin extraction strategy, which aims to earn a certain amount of Bitcoin every single day by writing premiums into the options market and earning that Bitcoin every day. So we're hoping, we're targeting that 5 to 7% per month in terms of Bitcoin extraction, with a 12-month target of basically doubling the Bitcoin within the fund. So that's an example of one of those systematic processes that we've been looking for, and we can continue to look for those to expand across the Portal Digital Fund.
Very good. And of course, in regards to the Radiance Fund, which is invested across, there's no double entry of fees in that. So it's a
Correct,
direct
yes.
investment into Radiance from Portal, and there are no extra fees charged in that process. So I think last month it was one of the top performers for the month. But let's start by talking about what Radiance did last month, and then let's move on to the Portal Digital Fund.
Okay, so in the environment where the CCI 30, the total market, or the 30 largest tokens, which is effectively the real market, that was up about 9.9% for the month.
Mm.
We did see an extension on the outperformance from April into May. As you recall, Bitcoin hit its low of 74,000 in April after the April 2nd Liberation Day tarification of the world, or
Mhm.
tarifying the world, that
Mhm.
President Trump did. So you saw that recovery in April. That extended into May, as I said, with the CCI 30 up 9.9% and Bitcoin up about 11.1% during the month of May. In terms of Radiance, our conservative estimates are that we will do about 9.8%. Now that is after fees, including I've put in there an expectation of a performance fee, so we think it'll just be around that 9.8%, but it could be higher depending on that performance fee or not. And then in terms of Portal Digital Fund, we're obviously getting soft estimates in from the other fund managers at the moment. That's looking at around about sort of 5.5 to 5.7% for the month as well. So again, sort of tracking in line with that 2/3 of the performance of the total market. So everything's sort of looking very much in line. Performed well, generated lots of Bitcoin income for the month in Radiance, and obviously Bitcoin went to a new all-time high during the month of 112,000.
Yeah, which is superb. We're all supportive of that. But what's important to note that in the Radiance Fund, it's not just about riding the wave of beta. That fund generates income paid in Bitcoin every month of about 5 to 7%. Greg, it's challenging for people to understand when we can quote that the month has been up 8% more in Bitcoin, but maybe up 9% or 7%, etc., mark to market, valued in US dollars. Could you take us through the process of differentiating between what we're generating every month in Bitcoin extraction and then Bitcoin compounding on a month to month annual basis, and how the fund has to report at the end of every month this artificial date that we all live by, but the actual market doesn't care a damn about, that we have to stop everything at a certain time and talk about the performance. So maybe give us your explanation of that, because people often struggle with the difference between the mark to market value, US dollars, and the fact we're compounding Bitcoin.
Yes, exactly. I'll try and explain it the best I can. So you're right. We did earn 8.8%, or we extracted 8.8% in Bitcoin for that particular month. So that's ahead of our target. The reason for that is as the Bitcoin price moved up, we actually had a number of calls exercised, which meant we actually realized some capital gains in addition to the income that we normally generate per month. So that's why the returns were higher for the month. But what that also means is that when we had those calls exercised, you'll remember that we synthetically cover the calls with perpetual futures. So when the call is exercised, we sell the perps, which means we no longer have the leverage into the fund until we dial back in at a different level. So that's why the NAV perhaps didn't grow as much during the month as we would have liked. Is because a lot of the perps were taken out because of those calls were exercised. In gross terms, we estimate the fund did close to 14% for the month versus Bitcoin at 11. So again, in line with that sort of 1.5 to 2 beta to the upside of the Bitcoin price. Just that, as I said, I've accounted for a performance fee this month. We'll see whether whether that gets paid over the entire holding within the fund, or not.
So you're just doing a technical paper on that now, because some of our family offices and ultra high net worths, which we've met in Singapore, have requested a detailed technical paper for it. On an extremely simple way of describing it, we've often turned around and said it is like buying a 20-story office building in the city. Every month, we put another level on it, complete with its income, and then another level, averaging about 5%, and then another level, and then another level. However, the building is extraordinarily volatile in price, and the building might drop in price by 15% in the month. And that volatility, exaggerated by the structure, might all of a sudden see a 23-story building being worth what a 17-story building would be worth for that month. And then, of course, what happens is that it normalizes, and then you're back to you continuing to build it. The goal is to ultimately have a 100-story building, and then the fluctuations of the market on a monthly basis means fairly little because you're so far ahead in compounding Bitcoin. So I hope that analogy works for people so that they can understand that what we focus on is the compounding and growth of Bitcoin every month, not its US dollar price, which some months look stratospherically good and other months look down. And also, we're not focused on month to month. That's why I described it as a very artificial date that the market kind of has no intention or interest in, but we have to report on that date. So very happy with the progress of the Radiance Fund. It is up around, in compounding terms, in compounding or extracting Bitcoin, around 30.3% to the end of May. So that's from when the fund first deployed the strategy in full form, which is on the 1st of January. All right, the Portal Digital Fund. How's that performed for the month? And what have kind of been broadly the types of funds that have outperformed the others?
Okay, yeah. So as I said, we're sort of expecting sort of 5.5 to 5.7% for the month. As I said, the market's up 10%. So some of the funds are sort of the buy and hold type funds, the token pickers. They have performed very much in line with the market, sort of between 8 to 14%. So some have outperformed, some have underperformed. Some of the arbitrage, lower volatility type of funds have performed very much in line with where you'd expect them. So they have underperformed for the month of May relative to where the benchmark return is, but they are very much in line with where we would expect them to be. And we obviously will continue to hold those positions because it does offer us a lower volatility exposure. The one really interesting one is been one of the type of systematic approaches that we like has actually outperformed, up 15.8% for the month, following on from a very good previous month. So that particular strategy is a very, very good strategy. It's a systematic approach, non-directional, and it's one that we certainly do like, and we have allocated quite a reasonable amount of the fund's allocation to, and we'll continue to do so and expect that one to perform. But that is very much in line with the type of funds that we're looking to allocate to going forward. So we're not relying on that market beta, and that these funds will do well regardless of the market environment.
Very good. So, Greg, without quoting numbers, we are partway through the month of June. In fact, it's June the 12th when we're doing this recording. How's the month of June looking so far, halfway through, with what we know of, which is the Radiance Fund and the movement of the Bitcoin extraction or compounding strategy?
I wish it was more volatile. So the volatility has come out of Bitcoin in this month. Certainly the first 10 days of the month. It's coming back in now. So we're probably being slightly ahead of schedule in the first week or two in terms of writing our income, but that's picked up in the second and hopefully into the third week. So we've had some nice realized gains come through there as well, which has really sort of benefited that. But yeah, I think that we're sort of seeing a very subdued market at the moment. But in an environment where you're seeing a significant number of companies now adopting a Bitcoin treasury approach, sort of mirroring Michael Saylor's strategy with Metaplanet, 21 Capital,
Yes.
a couple of Trump-backed entities doing the same. A couple of Bitcoin miners are even coming up with a Bitcoin corporate treasury strategy. And that's very interesting because you're now starting to see quite a drop off in Bitcoin held on exchanges down to levels that we haven't seen for a number of years. And also the OTC market, the over-the-counter market, which is primarily where these Bitcoin miners sell their Bitcoin. A lot of them now are holding the Bitcoin. They're not selling it. So that's really starting to dry up. And that's where Michael Saylor buys his Bitcoin from when he's raised his money through the Saylor Strategy stock. So I think we're in a quiet phase at the moment, but I think things are going to get quite interesting, quite volatile in the not too distant future. So keep a watch out for that.
And of course, volatility, that's exactly what we want. It's interesting how so often I hear from investors, such and such is too volatile. I prefer to buy bonds. Bonds is a dead market. It's no one's excited about bonds, and it's their returns are sub the real rate of reduction in value of the dollar, but there's no volatility in it. The point of the story is volatility is good as long as it can be managed correctly. And in our case, volatility is definitely, is definitely an asset for us to trade in. And so the minute the volatility drops away in the market, our returns, drop along with it. Not crash, but they drop slightly along with it. And when the volatility becomes very high and Trump jumps out and makes a great statement about 200% tariffs against some nation, then off the volatility goes and we generate very solid income from it. So looking at the time going forward, will be another month before we give an update on the month of June. Already it's looking promising and continues to be as we kind of expect it to be in the Radiance Fund. Market's looking reasonable, so the Portal Digital Fund should reflect reasonably well to date. And importantly, we're going to keep investors up to date with what we're doing with the Portal Digital Fund. Our view to date is that it has relied upon the beta of the market in the last few years, and that beta really has only been strong in Bitcoin, not in the realm of alternative tokens, which is a pity because that industry needs support, but it's not there at this stage, and we think maybe not for a while. So stay tuned with the fact that we'll be deploying to more market neutral, systematic, high performing funds like the Radiance Fund, like the fund we just quoted for you that we've got 2 deployed in already, and we'll increase the holdings in those along the way. Our goal there is to increase the volatility, stroke performance of the Portal Digital Fund, and we'll keep the investors updated with that each step of the way. Is there anything else you'd like to add to that?
Now, I guess the only thing I'd like to add, Deryck, is we're not afraid of volatility, and I think clients shouldn't be either. It's all about portfolio construction. It's how much you allocate towards the asset class, and there's certainly a lot of studies have shown that yes, Bitcoin is volatile, but it is uncorrelated with a lot of other asset classes. So it actually provides a really strong diversifying factor to portfolios, traditional equity bond portfolios, and also enhances return. And we're starting to see now Bitcoin emerge as a defensive safe haven. So a lot of those concerns that people have had about Bitcoin's volatility, I think, are probably misplaced. And I think it is a very, very good asset to be adding into portfolios, maybe in small amounts at first, but then larger over time as you get more comfortable with that volatility and you see the impact the returns have on boosting the total portfolio returns.
Yeah, very good. Thanks very much. I look forward to seeing you again on this program in a month's time. Meanwhile, for investors, feel free to reach out and say hello to Greg. So that's greg@portal.am, and introduce yourself or ask questions. We're always receptive to that. Bye for now.
Cheers. Bye-bye.